morning, everyone. We will start the morning call. US markets yesterday were up 0.6%. Today morning, US futures, Asian markets both are up, and even SGX Nifty is up about 0.5%. Also, yesterday, European Central Bank raised interest rates by a record 75 basis points and signaled further hikes to fight inflation, even as the bloc's economy is heading for a likely winter recession. That sent the Eurozone government bond yields soaring and supported the euro. US weekly job claims fell to 222,000, declining to a 3-month low from a downwardly revised figure of 228,000 in the previous period. Economists had expected reading to climb to 240,000. So this is an improvement. This suggests that the labor market is still in robust health, and economists have said that only a jobless claims figure of around 270 to 3 lakh range would suggest some slowing in the job market. The Fed is scheduled to hold its next meeting on September 20 and 21, with economists expecting it to increase rates by 75 basis points. And Brent crude remains at $90. I will now hand over the call to the technical team.
Good morning, all of you. Thank you, Jihan. So as we have seen in yesterday's market also, we have seen a very strong rally in Nifty. And as we had mentioned earlier, that if we get a closing at about 17,800, then we will witness a very strong rally in Nifty. It was 17,798, and it's almost around 17,800 levels. And as we take the cues from the global markets, SGX is opening around 100 points up. So we are thinking our markets are likely to open around 17,880 to 890 levels. So for today, immediate resistance is currently placed at around 18,000 levels. That is going to be a very strong resistance level for Nifty. Once Nifty closes above that, it can again test its previous resistance levels of 18,100 to 18,200. Whereas if we witness a profit booking at these levels, then the immediate support for Nifty is currently placed at 17,700, followed by 17,630. Moving on to Bank Nifty has shown a very strong rally in yesterday's session. It is more stronger than Nifty, and a bigger breakout was seen in Bank Nifty as compared to Nifty for today. And it has also closed above 40,000 level, which we were saying from last 2 to 3 trading sessions that above 40,000 it's going to be a strong momentum in Bank Nifty. So for today, the immediate resistance for Bank Nifty is currently placed around 40,550. And if we witness a closing above that, then Bank Nifty is going towards to test the levels of 41,000 in the coming session. So next resistance will be 4750, followed by 41,000. And if we witness a selling pressure from here or profit booking from here, then the immediate support for Bank Nifty is again 40,000, which is a very important support level, followed by 39,650. Moving on to Nifty Financial Services, it has given a strong closing above 18,000 levels. For today, the immediate resistance for this index is also placed at 18,150, followed by 18,250. And immediate support for this index is the psychological support level also, that is 18,000 levels, followed by 17,900. Stock specific, L&T is looking good. It is moving in a good direction, and it is following a channel. One can take a buy call for a target of 2090 to 2100. We have already initiated a buy call for this. One can keep a stop loss of 1900. SBI is looking good at current levels. On its long-term chart, it is looking very good, and one can take a buy call for a target of 565 to 570 with a strict stop loss of 528. That's all from my side. I request Neerav to take the call forward. Sorry, Amit will be taking the call forward.
Yeah, thank you, Ayush. Good morning, everyone. So, as for derivatives data front, we have seen that a strong rally has been witnessed in yesterday's trading session. The positive factor we have seen from the open interest of fund is that at 17,700 and 800 striker, put rider positions are getting added up, and against that, call rider positions are getting liquidated. Again, we are seeing that at 18,000 striker, around 1 million position of call rider is getting liquidated, but still there is heavy position pending at 18,000 strike of call rider position. If that position gets shifted, then we might witness a strong momentum in the market, which might surpass 18,000 level and which might get triggered towards around 18,300 to 400 level on the upper end. Currently, as per short-term basis, you should keep to the nearest stop loss at 17,700, and below that 17,500 will act as an important support for the market. Currently, the momentum is strong, so hold a long position with the strict stop losses. We are seeing that the PCR yesterday closed at 1.26 level, which has closed above the important resistance zone of 1.15 level. So this is also a positive sign. And India VIX also came down below 18.5 level, which dragged down almost around 5.5% on the lower end. So overall, all the data points seem to be positive in the market. So you should stay long for the new long positions also, and can create new long positions also. While as per the sectoral basis, we have seen in yesterday ring session that the banking sector has shown some momentum. So we might expect the banking sector to show some buying strength in next 1 to 2 trading session. From the banking sector, we expect SBI, Can Bank to show some positive strength. While from the other sector and stock, we expect Astral, Shri Digvijay Cement, GNFC, and Apollo Tyre. This four counter also looks positive in coming trading session. Thank you.
While both the technical and derivatives suggested that no, they are positive on the banking sector. So let me also fundamentally mention the stocks that we have been bullish on since last 3-4 months, and we have been pushing them. So we continue to be bullish on mid cap banks like Ujjivan Small Finance Bank, DCB, and Karur Vaishya Bank. We feel all these three banks can do very well and outperform even the banking index. Coming to news, the institutional team has come out with a thematic report on FMCG, whereby they are seeing good margin expansion over next couple of years. So firstly, in the last couple of years, what has happened is the FMCG industry faced strong headwinds because of multi-year high input cost inflation. But this was negated by reduced ad spends, drop in grammage, calibrated price hikes, and saving in operating cost, which contained the impact of on the operating margins. While there are already signs of correction in prices of some key commodities from their peak levels, companies are still holding high-priced inventory, at least for the next quarter. So from Q3 onwards, we are expecting that inflation will come off, and they will witness good expansion in gross margin. So accordingly, we feel that EBITDA margin can expand by around 200 to 300 basis points across the board, especially for companies like ITC, Britannia, Marico, TCPL, and Hindustan Unilever. So these companies should post a strong earnings growth from Q3 onwards. Among other news on the auto side, if we have already discussed the wholesale numbers, but retail numbers have also come out for the industry. Passenger vehicles increased 6% year on year for the month of August. Commercial vehicles increased 24%, which was the highest among all segments. Tractors declined 32%, and two-wheelers have grown by 8%. However, if we compare this August number with August 2019 number, which is like before COVID figure, then passenger vehicle has witnessed the maximum increase at 41%. Commercial vehicles grew by 6%. Three-wheelers declined 1%. Tractors declined 7%, and two-wheelers saw a decline of 16%. So this anomaly we can clearly distinguish. What COVID has essentially done is that passenger vehicle sales are up 41% from 3 years ago period, and two-wheeler sales are down 16%. So it's again the divide in the society that the people who are already better off have done very well during the COVID time, and the bottom of the pyramid has suffered tremendously, including the rural areas. So that is the reason we are seeing this different demand scenario for passenger vehicle versus two-wheelers. So gradually we think that with the economy opening up and bottom of the pyramid will again start catching up, and the demand should improve going forward, but it will be a gradual improvement, and the overall economic recovery in the bottom of the pyramid kind of products where demand comes from there will be kind of K-shaped. So it will be slow and gradual. Anyone else from the fundamental side? So I will now hand over the call to the commodity team.
Thank you, Kian. Good morning, everyone. Today, we are likely to witness positive movements in commodity. Gold can test 50,800, 51,000 on higher end. So buying on dips is recommended. One can enter long around 50,400 with a stop loss of 50,200. We have seen that it is holding the support of 50,000, and prices are likely to test higher levels, say 51,000 on higher end. Silver also is being supportive at 53,500, and we expect prices to test 55,500, 56,000 on higher end. So buying on dips is recommended in silver also. Crude oil may see a pullback. 6450, 6500 is a support zone, and we expect prices to test the resistance zone at 6830 to 6850 levels. So for the day, crude also looks attractive. Can buy 67 call or 6800 calls. NG, we have seen a gradual fall till 620 levels. So we expect prices to test, bounce back till 645, 650 levels. So for the day, we recommend to go long with a stop loss of 620. Metals similarly are looking good. We've seen yesterday copper reaching the resistance zone of 644, 645 levels, and we expect further rally in copper. 660, 670 levels could be the next target. So buying on dips today, the prices will open gap up, but we expect uh, a bit deep, and one can enter long with a stop loss of 650. Aluminum also 202, 203 is a likely target. So one can buy zinc 284. If it is stabilizing, then one can enter long. Prices can test 287 to 88 levels on higher end. Yeah, that's it from me. Dia can take up from here.
Good morning, everyone. On the currency front, the major highlight was the ECB meeting. So they had hiked rate interest by 75 basis point. This is in line with the market expectations. And going forward, Lagarde has said that they will do their part in getting the inflation under control. However, still a long way to get caught up with the Fed rates, and taking into consideration the kind of economic numbers the EU zone is posting, it will be a very hard uh, consensus to get again to get on with such a big rate hikes of 75 bips and 75 bips going forward. So it will be a very difficult uh, policy design that the ECB has to do in order to get the inflation under control. They are already struggling with the energy crisis, and I think they were quite late in getting the rate hikes done, taking into consideration the COVID lockdowns was ended, and even after Russia invaded Ukraine, they had not done the rate hikes as the inflation was accelerating. At the same time, Fed Chairman Powell was scheduled to give a speech, and he has again said that they are quite aggressive towards inflation, and they are considering going quite hawkish on the whole policy. So I think the hawkish stand by the Fed has somewhat mitigated the 75 bips rate hike of the ECB. And this is the reason why dollar index didn't fall very sharply in evening sessions or even today. It is still trading at a high of 109. Take into consideration that euro has a greatest has weightage into the dollar index. It is still trading at 109, indicates that there is still uncertainty whether the ECB will be able to continue with such massive rate hikes. Uh, on the dollar index front, I think it will remain on the higher highs. 105 has formed the base for the dollar index and it will trade above the same. Small pullback will be seen into the dollar index towards 108, 107.5, but that will be very momentarily since euro is seeing trade near parity. Uh, for the market, USD INR has opened at 79.73, and I think it is. Uh, you can go short into it below the level of 79.68 for a target of 79.55. Keep SL at 79.82. For the other pairs, JPY INR. Uh, Bank of Japan has said that they are concerned with respect to the volatility USD JPY is witnessing, and but however, no comments on any action that they'll take in order to anticipate or get the volatility under control. They have this is the first time Bank of Japan have come out and showed concern for the high volatile momentum into the USD JPY. I think you can go long into JPY INR above the level of 55.85 for a target of 56 to 80. Keep SL at 55.60. For Euro INR, it has opened up with a gap up. It could go with the bullish momentum, but I think wait for the prices to get stable. 80.53 would be a very good level to go long. So you can go long above that level, and 80.15 will remain as a support for Euro INR. For GBP INR, it is also following the bullish leg right now and trading at around 92.35. It has given a gap up. The support will be placed at 92.25 for the GBP INR. If it reaches that, it can come towards the lows of 92, 91, 90, thus witnessing profit taking of yesterday's sessions. So I think it will remain volatile and one should stay away from GBP INR in today's session. So that's all on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.